Get started in just a couple moments here. All right. Welcome, everyone. We've got a brand new episode of our actionable case study podcast. Today's title is called Strategy Eats Culture for Breakfast, how to experience a greater ROI as an investor. Today's episode is all about that integration of culture and how an organization is aligned with also adding in the financials. I want to start first by introducing myself. My name is Vinay Raman. I'm the CEO of Carmo, and I have with me today someone I call a good friend, Kush Shah. Kush, how are you doing today?
Doing well. Thank you, Vinay, and thanks for having me on your episode today.
Absolutely. I'm very excited about our topic today. You and I were just talking before we started the episode about some of the ability to take financials and how you can evaluate an organization. But then all of a
Yep,
sudden, you start to see the culture of the organization. You kind of overlay those on top of each other. It's just a whole different kind of picture that you're able
absolutely.
to see now. Is that kind of the way you're thinking about it as well?
Yeah, yeah. I mean, it's a very different picture when you overlay culture on the financials, and kind of changes your outlook completely, right? So that's amazing. I mean, it's a great way to look at businesses rather than just looking at financials from an ROI perspective.
Well, thank you for that, Kush. And here's what we're gonna do. Over the course of this, I'm gonna just tell you a little bit about myself, and I want to tell you a little bit about Kush, so you know who you're talking to, and we'll kind of introduce this topic of culture eats strategy for breakfast and how you can turn that into an ROI. First, I'd like to ask anybody who's joining in, please go to the comments there and type in where you're connecting from. I'd love to see. I've met some fantastic people all across the world. I already see John Lane joining in. John Lane, hello from Cleveland. Hey, John, good to see you again, my friend. Happy to have you here with us. I'd love to hear your comments from anyone. John, I know you're a pretty smart guy, so you'll have some great insights too in terms of culture and alignment of people and organizations. Let me start first by telling you a little bit about my about myself. I'm gonna give you just because it seems like I don't have a very nice pitch about myself, so I'm just gonna kind of read just a little bit about who I am in a compact format. So my background is business intelligence, artificial intelligence, and machine learning. I've been doing that for about 25 years. Uh, but I think more to the point is I've been spent a lot of time and built expertise around this idea of integrating cutting edge technology with human centric growth strategies. I founded three companies myself. I've had two meaningful exits, and it's all about how I've shaped my understanding of scaling and sustaining growth for companies while keeping people involved and engaged and happy and interested coming to work every day. I'll tell you a quick joke. I think about sort of the butt end of the joke. 20 years ago, people wondered why the propeller head was invited to the party because all I talked about back then was artificial intelligence, machine learning, data, KPIs, and metrics. But it's funny how that's really shifted to today. When I go to parties, people say, when I start talking about the integration of humans and culture and artificial intelligence, everyone seems to be listening. And it really, to me, is just kind of this marker of how we've shifted in the world to recognizing the real power of technology lies not just in the capability of the technology, but how it enhances humans power, humans capability, especially when we start to talk about portfolios and investments and growth of companies. I do want to do one more thing, and that is introduce you to Kush, who is my guest today. Kush, I'm gonna introduce you based on what sort of that snapshot I have of you. I'd love for you to add in if there's any pieces that I'm not adding in.
I'm sure you will do a better job than me.
Well, I've spent a little bit of time reviewing all the different things. I've learned a bunch of things about you along the way, but this is my best way to kind of understand and put it all together. So, for you, 25 years of deep hands-on experience in alternative investments, fund management, private equity. You're the founder of an organization called RISKEN, RISKEN, and I'll put the links to all of that, Kush's profile and mine as well, so you can see all of that. And you've carved out this real niche for yourself around helping investors see the bigger picture of combining these strategy goals with these cultural and operational insights. And it's kind of why you and I have been getting along so well, because that really truly mitigates risk. And I think that's something you've been doing for quite some time here. You've led countless high stakes M&A deals, merger and acquisition deals, guided portfolio strategies, especially where there's lots of details that count. And you've kind of brought in this overlooked concept of culture. You've always tried to integrate that in. And I think, again, it's why you and I have already resonated so much. Comprehensive due diligence that dives in below the surface, making sure that investors understand not just the numbers, but some of the human dynamics and cultural dynamics that come in. The way I like to think of it after reading a little bit about Kushal and just understanding more about his background, what his experience is, you're not just making investments when you're working with Kushal. It's more about investing smartly with your eyes wide open. Kush, is that I call you Kushal. Did I give you a
Yeah,
good
I mean
introduction there? Did I
that's perfect.
capture that
I mean, that's,
properly?
Kushal is my real name, but I go by Kush. I mean, it's absolutely okay. It's interchangeable, and I think you introduced me, as I said, like in a much better way. I mean, you said a lot more things about myself than I would credit myself for. So that's good. Thank you.
Well, I'm glad to have you here. I think this is a really exciting topic on just so many dimensions. And John Lynn says hello, Cleveland. But John is a good friend. Does a lot of work in and around understanding people's personality, where they come from. I think really germane to this conversation, because where people show up from and how they interpret the world is incredibly important as part of a culture. So, John, I would encourage you to share your thoughts that we have in this conversation throughout the course of this. I'm looking forward to having you on a show as well here shortly, John. Um, all right. We named this show "A Culture Eats Strategy for Breakfast." Peter Drucker said that some time ago, but I'll tell you, just in my knowledge of the world, my perspective of the world, it's so much easier to get the financials, the balance sheets, the profit and loss, cash flow statements. It's so much easier to measure that and see that. But this culture thing is kind of squishy to some degree, right? It's so hard to quantify it and even qualify it sometimes in a way. Kushal, I'd love to hear a little bit of your thoughts. Kind of, I feel like that's sort of a missing piece in evaluating organizations. I'd love to hear your thoughts. And while he's doing that, I'm going to put some links to Kushal and myself in the comments. And I'd love to hear others shared lived experiences in that as well. So, Kushal, I'd love to hear what your thoughts were on that.
Sure. So I think from whenever there is a mergers and acquisitions deal or any investment deal, especially from institutional investors like private equity or even venture capitalists, for that matter, right? The focus is always on financials, the commercial aspect of the deal. How do we structure it? What are the instruments we're using from a financing perspective, leverage that we're using, and all of that. And a whole lot of focus is on financial modeling, understanding every single detail, every single assumption in the valuation models and all of that. Of course, there is focus on understanding people aspect, cultural aspect as well, but it's not as deep as it should be in most deals. So I would say 99% of the deals would never go below the CXO levels of the companies that are being considered for either M&A deals or investments. When you go below the surface and just go beyond the profiles of the CXOs and try to understand their working styles, the leadership styles, the value systems they bring in. How does that align to the value system the company has? And then go to the next levels. I mean, levels below them, the CXOs -1 and -2 levels, and how do they what does their leadership experience look like? What are their value systems? How do they kind of fit into the culture, and how do they drive the culture? That's even more important, right? So when you start looking at those things, you would find surprising insights, which obviously proves the Peter Drucker saying true, because I mean it's a lot more than just the numbers. And when you then overlay this with the numbers, it is completely different perspective, especially in a private equity or mergers and acquisitions kind of environment where we're looking at longer term investments, right? It's not a trading environment where we're going to buy something today and sell something tomorrow. It's more like a 5-year, 7-year kind of horizon that we're looking at, and in that, like, cultural alignments matter a lot more. So that's where I think my thoughts are, that going a lot deeper and aligning cultural analysis with financials and all other aspects of the deals would make a lot more sense.
Yeah, I think you bring up some really good points here, and I want to kind of start to give a little more context for the sort of this episode here and what we're going to discuss. One of the things that Kushal and I did together is we paired up together and took. Kushal has some deals that he's done in the past. One in particular where he had financials from two separate companies. So you actually went through that activity over some period of time. We took that and overlaid it on top of this cultural analysis tool that we have built that shows the culture of two companies. We call it Apex Solutions and Blue Peak Services, just to give names to the companies. We showed how these two cultures, with this financial stuff, financial information overlaid, and it started to give us some insights. And we built that in the form of a case study. If you'd like to see that case study throughout the course of this, just type in CRA, which stands for Culture and Role Alignment, CRA, into the comments, and I'll make sure to get you a copy of that as a PDF so you can look through it as well. But that's what we're going to spend some time talking about today, is that case study that we've built together and sort of what you can see. I'd like to start first by I'm going to start talking about the executive summary and some of the key findings that we found out about this organization. I'm just kind of walk through them, try to be really quick here, because there's 5 of them, and some questions that came out of this. I'd love to hear that compared to what your lived experience was, Kush, and kind of how much faster this may have gotten you there, or kind of the insights that it may have given you instead of going through all those cuts, bruises, and scars doing it, right? So,
Yep.
key findings in this case study was strategic alignment. There's a misalignment in long-term goals between these two companies, and the agility and one slow decision making compared to the other. So, leadership decision turnaround time, customer retention rate is one challenge or one potential disconnect in culture. Innovation disparity. Apex in this case excels in innovation. Blue Peak lags. So R&D spending, time to market for new products, potential culture conflicts. Customer satisfaction. Blue Peak struggles with customer retention, creating risks. Net promoter scores, customer churn rates, potentials for friction there. Debt and integration costs. Apex carries higher debt, and the integration costs remain very unclear. So debt to equity ratios, cost synergies, and the last one is their revenue growth profiles. There are different rates. How do they go to market? Gosh, I feel like those are some pretty key aspects of evaluating deals and putting two companies together. Push your thoughts.
Yeah, absolutely. I mean, these are all very important aspects, and a lot of times in mid market, especially mid market segment, where companies are in, I would typically say in the below 250 million revenue range, which is defined as mid market, typically in the investment segment. This kind of alignments are kind of very expensive in the medium to long term, right? So when we're working on the deals, most people don't have visibility to how are the friction points going to look like a year down the line or 2 years down the line, right? I mean, that's not the focus of the deal as well. I mean, everybody comes with a financial plan, an integration plan on day one, provides projections for 5 years, 7 years into the business, but it's all, as I said before, focused on financial aspects rather than cultural aspects. So, do you then foresee how let's say, the lag in innovation investments by one company versus a lot more focus on innovation for another, and these are two cultures merging with each other? I mean, how are they going to interplay with each other over 2 years, 3 years time frame? We don't know that, right? I mean, and that's where this whole analysis from a cultural perspective kind of comes handy, helps a lot in developing that long-term perspective, identifying the key players who are going to be part of that friction, right? So not only at the CXO level, again, as I said before, but also down the line. I mean, here are the people who are really going to be your champions for the change. They have a lot better cultural alignment versus here are the people who are actually going to cause friction, right? So that level of details I mean, if I have visibility of this level of details right at the beginning of a deal, that kind of makes my job as someone who runs integration management office for a lot of deals a lot easier, and also develop benefits realization cases for the clients I work with. So, sorry. Yeah.
Yeah, no, I appreciate that. I think the question that comes to mind, and I'd like to ask the audience, I would love to ask John to chime in here, because I mean, this is kind of leaning into a space that you've got some expertise in, a lot of expertise in. And the question is, how do you, as you go into deals today, how do you investments, portfolios, integrating companies into portfolios? How do you account for culture today? What steps do you take? I would love to see. Have you been burned by not understanding culture in the past? I'd love to see that in comments. Please share that. I think that would kind of enhance the discussion. John, I would love to hear from your point of view, if you're so inclined. Personality conflicts are real. Not seeing these things and understanding where these personality conflicts come from could be, I mean, it's not a small issue. It becomes a pretty gigantic issue. So John Lane, I'd love to hear your point of view, if you're open to it, in terms of identifying these personality conflicts or potential frictions between personalities and how they can derail progress forward. And as I'm waiting for some of those comments, I want to kind of throw a statistic out there here that was quite amazing to me, just to hear this level and this sort of the magnitude of this. And the statistic is from Harvard Business Review in 2019. It said 70 to 90% of M&A transactions fail to meet objectives due to cultural misalignment. 70 to 90%. Gosh, that if I was going to make an investment, even in a vehicle, to buy for my child because they're going to be able to drive to school, and I know 70, 90% of the time that vehicle is going to fail, and that's going to be a bad buy, I'm probably not going to buy that vehicle, right? Absolutely. And that's purely because of cultural misalignment. Kush, thoughts? I'd love to hear from the audience, people listening in. What are your thoughts about that statistic?
Yeah, no, I think that's very. I mean, it is definitely. Having seen a lot of cases where mergers and acquisitions deals have failed because of cultural misalignment. I mean, it still comes to me as an astonishing fact. I mean, 70 to 90% is a pretty high ratio, and I think it's. I mean, it's probably the number one reason, in my opinion, for M&A failures, right? So it's not strategy, it's not finances, it's not bad projections, it's it's a lot about culture then, because I mean 70 to 90% is a big range, and that should be the number one factor then. And of course, I mean, I would always go with Harvard Business Review case studies, right? I mean, if they've published the fact, they've already done the research. So I think they've seen a number of cases where it kind of plays a big role. So with that statistic, it kind of opens up a whole lot more area for thinking. I mean, it kind of provides a lot more food for thought in terms of what should be considered while structuring the deals, and beyond finances, what should be the number one focus area.
So, a couple of things as I sort of transition to the next piece here, because I want to talk a little more about what we found in this case study on page 14. I want to read you a little bit about this. Two things. Number one is I want to tell you that being able to do this analysis is easily done inside of a month once we've got all the financials together, right? This is something that can be very easily generated as a report now. It's not something that takes 6 months, a significant amount of time. It's actually very shortened, and the reason why is because there's a diagnostic tool that we've built called the Culture and Role Alignment Index. It
Yep.
basically shows you the alignment between team members of an organization in organization A, if you're just looking at that, or even organization B, and potentially that overlap between alignment, misalignment between the two. It's a very quick thing. I do want to bring out something that John Lane said here, because understanding personalities is something that he does quite a bit. John Lane says much unproductive conflict comes from communication issues, which are exacerbated in times of stress and change. Um, John also typed in, this is a lot to type. Yeah, John, I'm asking you to do a really hard thing, kind of compile many, many years of experience into into one sentence that you can kind of get in here. I think trying to unpack this a little bit, what John is saying is, look, you start to put things into this crucible that is called this portfolio merger, or this investment into these two companies. You want them to work together. You want them to get married, for lack of a better analogy here. All of a sudden, egos start to clash, differences of opinion in terms of what the market's doing or how the market should be doing. Those things all start to come to bear. I actually just wrote a post today about that's going to be going out tomorrow, about how my wife and I, when she says take out the trash, I'm thinking, hey, I'm going to do this in 25 minutes. As soon as I'm finished with this episode here, my wife is thinking, hey, I want you to do that right now. Just difference in alignment. Neither party's wrong. It's just that they're different. Thank you, John. I would love to. I'd love to hear a little bit more about what you think about that, Kush, as I kind of go to this next page, and maybe I can see if I can get you in here as well, John.
Sure. No, absolutely. So I think when that analysis, and specific to this case study that we're talking about here between Apex and the Blue Peak Systems kind of merger, it's amazing to see the kind of opportunity areas that we identified from a cultural alignment perspective and how they transpire to the financials and KPIs. I mean, key KPIs that typically get tracked in any M&A scenario. And then also the risk analysis. And this is the softer side of the risk analysis, right? It's not the financial risk. I mean, financial risk is already factored into financial models and all of that. But the softer side of the risk is a lot more difficult, especially personality clashes, who's actually more. I mean, and then remember, there always are two executive leadership teams in a merger scenario, right? So we're then talking about two different sets of personalities who've been working with each other. I mean, who've been working within their groups for a long time, and then now they're coming in and merging with a completely different set of personalities who they've never worked with before. So understanding those dynamics, understanding who's actually a better fit, right? So to say, because in many, I mean, not many, but most M&A scenarios, you would end up having two CEOs, two CFOs, two CXOs. I mean, at every level, right? And who's actually going to fit in better for the kind of combined company, right? 3 years down the line or 5 years down the line from a strategy perspective. That cultural alignment, I don't think that exists anywhere from an analysis perspective today. So this is the whole tool that you've built is amazingly useful in that sense, right? I mean, it just gives that level of details which doesn't exist in the industry today.
Yeah, I want to kind of tell you the level of detail and insight that Kush and I were able to find in this, right? I want to give you some insights to the level. Now, we've changed the names. It's real financials and actually real data from an organization to organizations that we had. Just changed and abstracted the details out just to protect identities. Uh, Opportunity analysis on page 14, we talk about employee satisfaction and engagement. Apex Solutions has leadership, particularly in its CEO and CMO, who have high scores in employee engagement. Similarly, at the other company, Blue Peak, their chief revenue officer excels in fostering positive team dynamics. So we're starting to able to see sort of at a role level, at a CXO level, who are thinking about employee satisfaction and engagement in a really, really strong way. Brand reputation, Jason White, the CEO, and Emily Zhang, again, at Blue Peak Systems, have strong focus on brand reputation, building brand reputation. It's an area where they have a lot of emphasis. Quality control. Blue Peak has their chief, Matthew Clark, their CIO, believes in quality control and quality control solutions, but it kind of complements what Apex does in sort of the operational efficiency and their general beliefs. So now you're starting to see where there not just frictions, but there's overlaps in strengths, which, gosh, now you can kind of say, let me put that on the shelf because I know this part is going to go well.
Yeah,
But it
absolutely.
takes us to this other piece, and I want to get some comments here. And John has chimed in. I would love to hear from others if they're what they're hearing throughout this and what kind of they're taking some of the take home messages they're getting already. Risk analysis, right? Strategic alignment and agility. Apex, particularly its leadership team, demonstrate weaknesses in aligning daily operations with long-term strategy. And Sarah Mitchell, the CEO, and Rachel Taylor, COO of Blue Peak Systems, have trouble with agility as well. We're starting to see where there's going to be frictions and kind of where there's going to be people butting heads because they have different concepts of how we're going to do this. And I want to come back to that analogy of me taking out the trash. It's not about being right or wrong. It's just perspective is different. But this is something that may not manifest on day one of that investment or day 30 or maybe even day 90. It's once you start getting further down the road here, 6 months, 9 months, 12 months, and we're starting to see where those frictions are going to start causing lots of heat. I'd love to hear what you have to say about that, Kush. And John has something I would like to add on just after that.
Sure. So I think it's very important, right? Because here, I mean, as I said, like long-term view of who's going to fit in where, what are going to be the friction points, and not just friction points between the teams and the leaderships, but also in terms of strategy, because eventually this whole cultural misalignment would also kind of impact the strategy. So you have the strategy in place, you have the financials in place, but eventually that whole cultural friction is going to impact that strategy. It's going to impact the business plan you drawn out right at the beginning of the deal, and it's not forecasted, it's not factored into the risk, financial risks. So that's that interplay, that overlay of cultural risk on financial risks. I mean, that is a critical part for someone like me who drives these deals. If I have the visibility of that level of information right at the beginning of the deal, it makes the planning, the risk analysis, overall risk analysis for the project and the deal a lot easier. And also go back and communicate that to the investors who are involved, right? So from a private equity perspective, for example, if this deal is being driven by a private equity firm, I mean, they would love to see this because they've never seen this before.
So I want to kind of hone in on this, and I actually, John, I want to come and put your comment on screen too. I think this is really important here. But if I look at things from as a human, right? There's so many dimensions to human, right? Sort of your spiritual and faith beliefs, right? There's a physical strength, your financial, your relationship, marriage, whatever that, romantic relationships, professional, so on and so forth, right? if we look at financial as just one aspect, it gives us one narrative of what is possible to have here. But it's like just seeing my health from the doctor, right? You
Right.
can see one side of it, but you can't see the amount of heart that I've got when I'm running that marathon. I'm just not gonna get beat, right? You can't
Sure.
quantify that stuff. So being able to bring these quantitative and qualitative factors together tells you a richer story. And the fact that we now have a tool that can quantify and qualify that culture where you can see a visual in just 90 seconds, really. Plus, as financials, it doesn't say that the financials are wrong. It adds additional dimensionality to the narrative that you can see because you can
Absolutely.
see so much deeper within that. And is that kind of your lived experience in kind of seeing this?
Absolutely, Vinay. So, I mean, again, a deal, like just the way you mentioned the different dimensions of a human, right? I mean, every deal has different dimensions. So there is strategy, there is financials, there is technology, there is processes, systems. I mean, all of that, and culture is often narrowed down to the HR practices and people. Which is more process driven, it's not strategic. So when you look at culture at a much broader level and go into this levels of details in that, it adds a completely new dimension that lacks in most deals today.
Yeah. Yeah. I'm gonna say something here. It's something that I've come to believe over time is that people are the ultimate profit center because all value is created by people, right? And I
Absolutely.
think for a long time we've treated them as a cost center. And I want to put up John's thing here, John's comment here, because I think this kind of talks to this, right? He says that I resist the phraseology of soft skills, work like we do, work like what John does is directly accretive to the bottom line. People are typical the number one or number two cost in a business. Helping them communicate in effective drives revenue and profit. We've seen people as a line item saying, "All right, this is what our cost is." I think a fantastic way someone expressed it to me: if 74% of the people, according to Gallup, are disengaged, that means for every $100 in payroll, 74 cents out of every dollar is just being flushed down the toilet as soon as you write it. That's a terrible investment. I think
Absolutely.
through what John does and kind of what we're able to start to see here in this richer narrative with the culture and the financials, let's get more of that. Let's get that every $100 of payroll to become $250 in return. John, I would love your comments. I'd love anyone else who's listening in, and how that resonates with you. Kush?
Yeah, no, I think this is great, right? I mean, this is exactly the perspective I was talking about, that people are not just a line item from an HR perspective in a deal. I mean, it's not just the payroll cost that goes into the financials. It's a lot more beyond that, and that aspect is more often missed in today's M&A deals environment, right? Especially because the focus is so much on profitability, cash flows, leverage, and all of that. But when you talk about a deeper level analysis of people, their personality traits, how they relate to the overall culture of of the two companies that are merging, and then eventually what's the impact of that from a quantification perspective on the financials and the strategy. I mean, that is just a completely different picture that doesn't exist in the industry. So that's, I mean, absolutely, John, I agree with you. I mean, this is number one or number two cost, but it's not just cost, right? It's a lot more than the cost.
Yeah, let's turn that to let's turn that as into an investment, right? Number one
Absolutely.
and number
Yeah,
two investment in the company, right?
it's your number one, number two investment, and it's I would say it's beyond investment also, right? Because it's not just about investment, it's about your existence.
Yeah.
So, I mean, if this people are not going to fit in, you probably may not have the business. I mean, in a few years down the line. So that's more about existence of the business, and that leads to the success or failure of the deal.
So I want to ask a question here, and I want to kind of go back to this because I suspect I know if I have a felt sense of what I think the answer is here. I don't have a stat around this, which is around this idea of assessing culture today. I don't hear of it done very often, and I suspect, I think my answer is or the reason it happens is because it's difficult to do. It's squishy. It's tough. I mean, we're talking about a qualitative thing, right? It's sticking your finger up in the air and saying, yeah, I think the culture is right here, right? Uh, and if you go to, if it's a 100-person organization, 100 different people are going to use different language to articulate that. I think that's the power of what we've done in this case study. And if you'd like a case study, a copy of this case study, I'll send it to you as a PDF. Type in CRA, which stands for Culture and Role Alignment Index. I'll actually send you the case study so you can look through it yourself and see sort of these findings and how quickly we did this. What are your thoughts around that, John? I would love to hear your comments, or anybody else who's listening. Why has it been so difficult for people to assess culture in these deals and being able to put them together? Kush, thoughts on that?
Yeah, sure. So I think I mean, there is when the deal is happening, right? It's a project view. It's never a long-term view, right? So you're basically looking at it as a 3-month window that I want to close this deal in 3 months or 6 months, and that's my vision. My vision doesn't go beyond those 6 months. That, hey, once the deal is done, once the alignment is done, I mean, legal aspects are completed, financials are completed, checklist items are all done, systems are. I mean, integration aspect comes much later, right? I mean, while integration planning happens during the deal, the actual execution happens much later. So that first that view itself is not there. I mean, in the during the deal phase. The second is, forget about two different companies merging in their cultures. Managing culture for a single company itself, difficult, right? So I mean, quantifying the culture, understanding the cultural pain points, the friction points for individual companies itself, and a lot of times the acceptance by the CXOs or the executive leaders that we are the ones who are driving the culture, right? That itself is difficult. So when it is difficult to accept that we're driving the culture, people are looking up to us, and that's what is driving the real culture in the company. Uh, it comes, I mean, and it has to be bottom up instead of top down. But that approach doesn't exist in most companies. I mean, when that's the kind of environments we work in, how would you then look at like two different companies coming together and doing that bottom up culture analysis for those two companies instead of one? So it's an extremely hard thing to do without uh, without a intention to do it. So you need intention to do it. I mean, it has to be done intentionally. It just cannot be a random exercise. Two, it has to have that level of vision that this is not just a 6 months period of the deal, but this is going to go beyond the deal and it's going to impact the business over next 5 years, 10 years, 20 years, right? And third is just going beyond that. I mean, just establishing the accountability, right? That who are the people who are really responsible or accountable for culture, and why should they do it? I mean, getting that buy-in is extremely important, and all these three things are hard. I mean, they're
Uh,
complex. I mean,
Yeah, I
it's
mean, I think that seems to be a much better way and much more elegant way of saying what I think I was feeling. I appreciate the more in-depth experience. I mean, because you've been through it and you've seen kind of what those frictions are and trying to do it. I think I'm going to summarize a lot of that to kind of distill it and say, to repeat it back to you. It's complicated, right? It's really complicated to do it, right? So I will tell you for myself, I'm the first one to stand in line. Share. Sometimes when things get complicated and they're on my to-do list, they kind of keep getting pushed to the right
yeah,
because
absolutely, yeah.
that's right.
In a mergers and acquisition scenario, right? If you The hardest part about this is that if I, let's say, if I as a CEO of my company am involved in a mergers and acquisitions deal, and if I put my fingers up and say that I am accountable for this whole cultural aspects, that means at some point, if the deal fails, I am accountable for that as well.
Yeah,
And how many people would want to take that accountability? That's
yeah,
that's what makes it really hard.
yeah. And I think what we have here is an opportunity to build using this tool along with this financial overlay is to actually see as an outsider coming in, get a quantitative view of what that culture is. So now I can start to ask, I tell my children all the time, I don't measure your intelligence by the number of answers you have. I measure your intelligence by how sophisticated the questions you ask are, right?
Exactly. Yes.
Now, if we can see what the culture is, and I want to kind of go back to this case study, right? It actually suggests some of the questions to ask based on the frictions that this company is seeing over here as an individual, this company is seeing as an individual unit, and then really between the two of them, what is the question we can ask about the integration of the two? John, I would love to hear from you or anybody else listening in comments about this. Is it all about the right questions, Kush?
Yes, absolutely. I mean, I think cult. I mean, how do you? So again, we accept the fact that it's complicated, it's hard. How do we then tackle it, right? And that's all about asking the right questions. I mean, we're not then we're moving away from that individual accountability, which makes it hard, and making it a more systemic, more scientific approach. That here are the 10 questions I should be asking, which I'm not asking in my individual capacity in whatever role I'm playing in that deal. And if I ask that, those answers are available to everyone. It's not just me, right? And then those answers will help me identify not just one person or two people who are accountable, but the entire process that can establish accountability at different levels. So that kind of then simplifies the process comparatively.
Yeah.
So it's more scientific, right? I mean, it's evidence based. It's not bias based, or it's not personal opinion based.
Yeah, right. And I think that's kind of what's really powerful here is this. I mean, if you go ask the CEO, this chief operating officer, senior leadership. Now, there's another stat. I don't remember the exact specifics, but I think it was something to the order of about 78% of senior leadership believes everybody in the company is aligned. But when you go down to the what I'll call the rank and file, 33% of them believe they're aligned. Right? There's a significant delta. So now you have a way to abstract what that role is and that bias and kind of the role, kind of see that and say, how aligned is this culture at senior leadership and every minus one, minus two, so on and so forth. But two organizations, if you want to get to that level of depth based on how big that organization is and how important this deal is. And the fact
Absolutely.
that you can do all this stuff inside of 2 weeks, inside of 1 month, gives you tremendous value in terms of speed of seeing where these questions that you need to ask are. Again, leaning back into a little bit of what John Lane does with seeing personalities and how they interact with each other. I think there's a real power here in being able to say, all right, so we've now started to identify the chief marketing officer over here and the chief marketing officer, chief operating officer, for example. There's probably going to be conflict because they see things differently. Perspectives are different. John, I mean, I would love to have your. I mean, this is kind of what you talk about all the time: is how to speak somebody else's language, right? If you know where they're coming from and what their perspective is, all of a sudden you have sort of this codex, the Rosetta Stone. I mean, that's what you do, John. Is given that Rosetta Stone to go from here to here and have that conversation, so the two of them can find that shared reality. And look, I think that shared reality is ultimately how you de-risk uh, an investment. Kush,
Absolutely.
thoughts on that?
Yeah, yeah, absolutely. I mean, if that visibility is, as I said before, I mean, if I have that visibility right at the beginning of the deal, right? I mean, I would factor in all those risks. I would work on that cultural alignment right at the beginning instead of waiting for my integration efforts to kick off after my legal and financial closure of the deal, right? I mean, that's much later. So I mean, that's and then it can also, I mean, so from my perspective, right? I mean, if I look at a portfolio level, it helps me do two things. One is evaluate existing portfolio companies that I would have as an investor, and look at how do they fit in and identify the reasons some of them may not be delivering the results we kind of projected at the time of the deal. And two, evaluate proactively any new deals that come to my table and take that call whether this company or this deal is going to fit into the portfolio basket I have or not, right? So as an investor, that provides me a powerful tool to look beyond financials and strategy and talk about what's really going to work and what's not going to work.
Yeah.
Much, I mean, like very proactively. I
Yeah.
mean, which is what I don't have today. So I mean,
Yeah.
2 years into the deal, I've done the deal. 2 years into the merger, I can tell you what's going to work and what's not going to work because I already know what's not working.
Yeah.
But if I can tell that in the first few months of the deal or even before the closure of the deal, that is a lot more powerful.
Yeah, there's a stat here that was shared by Deloitte in 2022 that said 30% of post-merger turnover often results from ignored cultural alignment. As in, what if instead of losing that 30%, 18 months, 24 months later, what if there's a way to start to address those issues at the beginning? So we're focusing on day one or day 30 on maximum productivity, profitability, buy-in, as opposed
Absolutely.
to starting to fight people to say, no, no, please, I've got to got to start offering lunch to get everybody to show back up at work again because one company has had a complete work from home policy since COVID, and now we're saying, no, 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 that's not the culture that we want to create here. Now we're starting to fight people as opposed to starting to actively address those things up front. Gosh, how much wasted time and effort when in fact that could have been seen from the get-go. I, I want to shift a little bit of our focus here because, I mean, again, Culture Eats Strategy for Breakfast was the title of this. And the piece that I want to talk about is this financial overlay, right? It's this
Yeah.
idea that now you have this alignment, culture and role alignment index, which takes moments. So we promise in 30 minutes that you can actually see the culture of you can visualize the culture of an organization and the connect or disconnect alignments, misalignments. Um, uh, but now when you have this financial overlay, you really have this ability to go to a much deeper level from your due diligence, predict these issues before they happen. Give me some stories, Kush. Maybe with this particular deal. I mean, you had the financials from these two organizations. What what didn't you see coming? Is there some specific examples that you could share about what you didn't see coming, and maybe what this case study may have identified or did identify?
Yes, absolutely. So one of the things which was an important aspect of this deal from financial perspective was research and development or innovation. And both these companies had this different approaches to innovation and R&D. One was heavily investing in R&D, one was not. But then one of the cultural aspects which we never saw beforehand and would have helped us a lot was where does the innovation come from a cultural perspective, right? So is it top down innovation where the CXOs and the leaders are pushing innovation and they're basically saying that, hey, why don't you innovate because we want to, I mean, that's part of our strategy, versus another company which was not really investing in innovation. But does that mean that innovation was not happening? I mean, innovation was in that company, the innovation was bottom up. I mean, there were a lot of smart, intelligent people working in different teams, and they were coming up with lots of good ideas, lots of innovative thoughts and products, which could have taken the company to a whole new level. But there was no receptivity to those innovations. There were no proper channels. There was no culture of kind of promoting those innovations. So where would they take it to? So if I had a visibility that here is one company that has top-down innovation approach, they're ready to invest and they're encouraging people to come up with innovative ideas, innovative products, and they're ready to kind of put their money online for those innovations, versus another company which has a lot of people coming up with ideas, but they're not getting to the right place and they're not even focused on that. I mean, I would then know right at the get-go that this is going to be a major friction point at some point in the deal, in the life of the deal. once the companies are merged. And here is how I would structure the innovation. Here is how I would take those people who are coming up with innovative ideas from Blue Peak systems, but not being listened to. And how do I integrate that group of people who've always been actively innovating things into the innovation and R&D arm of Apex Systems, right? So, I mean, if I had that level of visibility, that would lead the financials to a very different place overall, because then my financial projections for these companies would look very different for the merged entity. I mean, it completely lacked the innovation driven finance, the IP creation, and all of that, because we never expected that would happen. Uh, Versus if I had that level of visibility, I would know that I can make it happen by this cultural alignment, this teams working together, or these people working together in an R&D lab kind of an environment, and providing a funding, a micro venture fund kind of a thing within the company, and fund that innovation, bring those ideas to life, and create IP driven solutions, which was not part of the plan originally. Now imagine the valuations, imagine the cash flows, imagine the profitability if I had that visibility of those IP driven innovations right at the beginning.
I appreciate that. I want to share a couple of John's comments here. I want to make sure that if you want to get in touch with us and see how you can run this same cultural and risk, culture and role alignment index for your organization or any companies that you may have in your portfolio or that you're thinking of investing in, is a very quick process. We'll start to identify these things just as Kush was talking about around R&D. It'll identify these issues for you in moments as opposed to months. Where you can put these micro funds together and actually turn those potential risks into opportunities. So I'm going to put that into the comments here. If you want to connect with me, connect with Kush, I'll connect you to him. Or if you want to see how to get this report for yourself. In the meanwhile, I want to share a little bit about what John was saying about this. And I would love, if you have an interest in connecting to John, I think John, Kush, I probably should connect the two of you because of what you all do. John says, also, I can run a review of an entire company in a matter of weeks, more effectively, better data, and lower cost than typical providers. Please type in if you want to connect to John. I'll connect you with him because he does a lot around understanding people and de-risking sort of conflicts between people. These are all tool sets. John and I have actually done a case study on a company where we took this cultural and role alignment index report for an organization. We wanted to see if we had the right butts in the right seats. Sure. And with John, we were able to find out that there's some people who are the right people. They're just not in the right, they're not necessarily in the right seats. So how can we do that? And actually that might be a thing I want to kind of touch on as a last point here. Maybe you can give me some closing thoughts here, Kush, is finding those right people for those seats. I mean, that's something that we kind of also talked about in this case study, right? Is, look, you've got two CEOs, two CMOs, two CROs, so on and so forth. How do we kind of shift and move? I mean, there's egos at play here, right?
Absolutely.
Which are going to influence this heavily. How do we shift those people based on what they are? I mean, all these puzzle pieces, how do we move them around so we can put people in the right places? This is an opportunity as well, kind of identified in this case study.
Absolutely.
So I'd love to hear your thoughts on that and kind of some closing thoughts.
So I think, I mean, this is another critical aspect of this analysis, right? And the way it helped someone like me to make decisions. I mean, in a typical M&A deal environment, most people, most leaders who are calling the shots would look at who is, I mean, if I have two CMOs, for example, who is going to be the one who's going to take over? And the thinking is I would let go the other, right? Or realign their role to something else. I mean, that's typical M&A environment. And especially in mid-market segment. I mean, that's how it is seen, that I don't need two CMOs, I don't need two CIOs or CTOs. I have to get rid of one, or I have to realign the role to something else. One thing that this analysis provided me was succession planning tool, right? From people perspective. So here is a CI. I mean, I have two CIOs or CTOs in this deal. I mean, yes, one of them is clearly a better fit for me for immediate perspective or next 2 years. But then he is at a certain level in his career. He obviously has been with this company for long enough. Uh, he's already indicated that his retirement intentions a couple of years down the line. Now, who is really going to be my best bet for replacing him 2 years down the line, right? So do I then want to lose the other CTO who already knows the other half of the deal, and just go with one CTO who I know is going to retire in 2 years time? Or do I look at their strengths and their friction points, work on it with them, and make sure that they work hand in hand as a team for next 2 years, so that I already have natural succession planning at the end of the 2 years? Now, that's a very powerful tool, right? I mean, succession planning is in 90 to 95% of the deals, succession planning is often ignored from a people perspective.
Yeah.
And I mean, it matters a lot because provides consistency, provides stability beyond initial period of like integrated entities and all of that. So, I mean, that was a big part of the whole analysis that came out as like right seat in the butt, right? I mean, it never existed before in any of the deals I've seen.
Yeah. So I want to bring us to close here because, gosh, that hour actually feels like it went really fast.
Absolutely.
I think that was. I mean, this is a I don't know 50-page report case study here. So there's trying to cover all of that in the course of 60 minutes was it was not doable. Um, I would love to send this out to anybody. It's there's no cost or anything like this. This is something that Kush and I put together using real data, real financials, de-identifying it. I think some of the things that we came up with here and some of the statistics that we talked about were it's the idea that 70 to 90% of M&A transactions fail to meet objectives due to cultural misalignment. This age-old saying that culture eats strategy for breakfast from Peter Drucker. And I think this other one that's 30% of post-merger turnover often results from ignored cultural alignment. I think there's by being able to see through our culture and role alignment index, based on the expertise that Kush brings to the table. Reach out to Kush. Reach out to myself. If I put it in the comments here, if you'd like to talk to Kush, type in M&A into the comments, and I'll be more than happy to connect you to him. If you want to understand more about the culture and role alignment and how that works, be happy to show you that as well. Just type in VR, and I will my initials, and I'll get that out to you. Also, if you'd like to connect to John, I'd be more than happy to do that as well. Just type in John. I will connect you there. But finally, I think most important is that case study. Type in CRA for that case study, and I'll get you that case study. So you can find out how you can not just leave culture sort of to the birds to figure out. There's a real opportunity here to make this something really powerful. If you'd like to get in touch with any of us, type that in the comments. John, Kush, myself, or if you want that CRA report, type in CRA in the comments, and I'll get that over to you. Kush, I appreciate the time, the attention. I think we've done some beautiful work here. I think as people get to see it and how elegant it makes your understanding of the risks that actually the risk narratives that exist and the opportunity narratives, I think it makes it very elegant.
Absolutely, Vinay. And this is absolute pleasure to be here. And thank you so much for having me here on the space. And it was excellent working on that case study, and look forward to a lot more in future.
Yeah, thank you for your time. For all those who participated and listened in, thank you very much. John Lane, always appreciate you, brother. You're always out there to support me. Thank you so much. Love what you do. If you'd like to get in touch with John, please reach out to me. I'll get you in touch. Kush, thank you for your expertise, your insights, and all the years of experience and perspective. I think you helped make this a really productive conversation. Thank you,
so
everyone.
much. Thanks, everyone.
Look forward to our next podcast.